Well, good morning, everybody. Happy Thursday. Really excited for our webinar today. As you see on our screen, it's going to be on Mutual of Omaha's Simplified Issue Life Products. Before we begin, just a couple housekeeping rules. First of all, my name is Jim Codney. I'm National Sales Director here at Western Marketing. Thank you very much for taking time to be with us today to learn about Mutual of Omaha's awesome suite of simplified issue products. We're here for you. So we will have two special guests from Mutual of Omaha on the webinar. They're taking the time to help you answer questions, train you on their products. So if you have questions, please type them in the question box, and we will do our best to get to those at the end of the webinar. If we do not get to your question at the end of the webinar, it's probably because you asked something about an individual case or something that's best suited for a personal phone call. So don't fret, our team will reach back out to you after the webinar. So with that, not only do we have two really great people from Mutual of Omaha, but we have two friends of mine who do a lot of work with us. They are, when I say core carrier, I mean that. And on top of that, great partners. I'd like to introduce Kurt Williamson. He is, I call him the king of all things sales related with Mutual of Omaha on the life side. And Cindy Burke, she is the goddess of sales. So Kurt, Cindy, welcome. Thank you very much, and take it away.
Thanks, Jim. I appreciate it. And guys, just so you know, I'm a big fan of what Western Marketing brings to this industry, and you are probably in one of the best agencies around. There's a reason that they're part of the Integrity family, right? Western Marketing is just gangbusters, and I love what they do. And so if you want to be successful in this industry, you couldn't put yourself in a better spot. Myself and Cindy Birch, we are your sales team here at Mutual of Omaha. I've been in this industry for almost 30 years, Cindy about as long. So her and I work hand in hand, right? Just to give you a little bit of background on me, and I'll have Cindy share a little bit on her here in a second. I've been with Mutual for about 7 years. Prior to that, I worked for Berkshire Hathaway, and prior to that, I was a producer for 18 years or so. So I've been in the industry a decent amount of time, and I know a lot of the products that are out there. And what I will say, and the reason why I do what I do, is that I like the simplified issue product so much because it really streamlines your business, right? It's an important thing for you to be looking at. And there's a balance, and there's a difference, obviously, between simplified issue and fully underwritten, and we'll talk about that. But anyway, that's a little bit on my background. Cindy, if you could just introduce yourself and say hi to the folks.
Good morning, everybody. Hello, thanks for joining us today. Again, Cindy Burks, I'm the account executive. I've been with Mutual, actually, the end of this month will be my 10th year with Mutual. And as Kurt mentioned, literally about 28 years in the industry, anywhere from customer service, underwriting, policy owner service, sales, a little bit of everything. And I look forward to working with you guys. As Kurt mentioned, we're building our relationship stronger and stronger each year working with Western Marketing. They're an awesome group of people.
Yeah, thanks, Cindy. And again, guys, her and I work really well with each other. We know each other probably a little bit too well. But her background in underwriting, as well as mine, is extremely helpful in getting cases delivered. So let's go ahead and get into it. Little bit about Mutual of Omaha. Guys, you know Mutual of Omaha. Interesting thing is your clients know Mutual of Omaha, right? Brand recognition is strong with us. It's extremely strong with us. You'd be hard pressed to come across folks out there in the market that if you ask them, hey, I work with different carriers, and one of them is Mutual of Omaha. What have you heard of them? I will almost guarantee you'll get a positive response out of that. Hell, half of the people out there grew up on Mutual of Omaha's Wild Kingdom. If you don't know what that show is, that's and I'll talk about it a little bit more here in a second. It helps with brand recognition, but it was Discovery Channel before Discovery was around. For a good 30 years, that was out there. We had a group doing different things with the wild animals and stuff, and we brought it back this past October. It's on Saturdays. So again, that keeps the brand recognition out there. Strong and stable, yeah, we've been around for over 100 years. We're not going anywhere. We're a mutual company, so that means we put the idea of our clients first. It's important to us that everything we do, and it's some of the conversations I've had with especially our executive team is anytime we talk about products, the first thing everybody talks about is the client. And that comes before everything. So I love that fact. A dedicated team. Guys, you have 150 people on our sales support staff. You have a huge group of people on the underwriting staff. You have Cindy, you have myself. You have any number of dedicated people for you. I'll get you some contact information and stuff like that here in a minute, but I do want you to know that you're supported, right? It is no secret that the producers and agents in this business are our lifeline to get our products to the clients and customers. So we take what you do very seriously, and we know that if we're not supporting you correctly, well, you're not going to sell our product, right? So I do have a dedicated team that will help take care of it. Simplified issue product portfolio, yeah, it's as competitive as you're going to see. We have 5 different products that are in our simplified issue portfolio. We have the only truly express IUL on the market currently. There's a couple that may be coming out. I'm curious to see what those are about. I do know a little bit about some of the ones that may be coming, but as of right now, we're the only one. And that's because we understand the power of an IUL probably better than most. And for us to be able to offer an IUL as a truly simplified issue express product is something special. Fast and simple underwriting, quoting, and applications. Yeah, we make that as simple as possible, guys. You can literally do it from your phone. There's an app you can download, and we'll talk about that a little bit later. Or you can just log on to mutualofomaha.com/simple, and you can go right there to our sales professional access, and you can access all the underwriting and quoting tools and apps you're going to need. I talked a little bit about this brand recognition, right? There's Mutual of Omaha as well. That's the old school one with Marlon Perkins and Jim Fowler. There's a couple new folks that are doing it. Golf sponsorships, we sponsor a lot of different things. These are 2 of the main ones that we do. So again, your clients will know who Mutual of Omaha is by and large. And the other cool thing is that they're going to have a positive feeling when you mention the name. So that does a couple things, right? It kind of follows that old trustworthy selling model where you gain a little bit of trust because you're leaning on a carrier with a positive brand recognition. And I think that's important for your business. A+, A1, A+ better rated. I mean, we're as financially secure as any carrier out there, right? We have enough in reserves to match all our financial obligations. So yeah, we're a solid company and we're not going anywhere. Here's a couple numbers for you. And again, you're going to get my phone number. You're going to get Cindy Burke's phone number as well. That if you run into a pinch and you need some help or you want to talk about a case or case design, I mean, you have some insanely talented managers and sales directors at Western Marketing. These guys are as good as they come. But if you need some help specifically for a Mutual of Omaha product, yeah, all day. I'll get you access to us. But again, we have a sales support line. We have underwriting and obviously the iPipeline folks, if you have some tech questions that may come up during an application. Sales support, I'd encourage you, utilize those guys, right? If you need illustrations done, if you need marketing materials or whatever, call them. They're really super helpful and they're a core group of what we do, okay? Underwriting, there is a email address in the middle there. expressriskassessment@mutualofomaha.com. Make sure you mark that down. I will send it back out to you after we get done with this and make sure that you have it. If you have questions about whether or not somebody is a fit for a particular product, maybe you don't know, maybe they have a lot of medical issues and you can't quite figure it out with the underwriting guides and all that, shoot them an email. Make sure you CC me on it because I'd like to be involved in those because I know quite a bit about the underwriting, as does Cindy. But say, hey, I have this, 52-year-old male. He had cancer 5 years ago and been in remission since. Would he be eligible for whatever, a given product? Shoot him an email. They will get back to you within 24 hours and say, hey, this person would qualify for this, or maybe they don't qualify for this, but maybe they could go the fully underwritten route. Okay, it's a it's a real handy pre-qualification, and it does a number of things, right? It cleans up the application process, so you're not guessing when maybe you can't figure it out about whether or not a client's going to work, right? And again, the iPipeline and the app, that's the tech support folks for the application process. When you run into things there, or if it's being wonky, give them a call. They're pretty helpful with that as well. So here we are. I mentioned that we have 5 products in our Express Life portfolio, right? Children's Whole Life, IUL Express, Term Life Express, Living Promise, and our Guaranteed Advantage. Our Guaranteed Advantage, which I'm not going to spend a whole lot of time on because it's insanely easy, is literally our accidental death policy. That is the go-to when you have a client that doesn't qualify for anything, that they really have so many illnesses and sickness that they don't qualify for anything else. That's your backup. And it's a great policy, but literally all the rates are on a chart right on our website. You can go look it up, exactly what we're going to charge for that. So keep that one in mind. But the 4 core ones of life insurance products, Children's Whole Life, IUL Express, Term Life Express, Living Promise, those are all fantastic ones. Here's a really cool thing about how our simplified issue and our Express products work. As you're filling out the application, we are pulling information. We are pulling information that's going to allow us 83% of the time to give you a decision the minute you hit submit. That is really solid. It is really solid because we're utilizing a lot of data that's out there. Okay, it's no surprise to many of you that insurance companies have access to a lot of data, but the way we utilize it in conjunction with each other, because we're pulling stuff from Milliman and Telescript, the MIB, and that, so we can paint a good picture of the client. It allows us to, again, give you a decision 83% of the time when you hit submit. The other 17% of the time, maybe we're getting some conflicting information, so we may have some follow-up questions for you, so that's going to get referred to underwriting. Not a big deal, but a significant portion of the time, you guys are going to get a decision right there. That's great for you. That's also great for your clients. So let me back up for a second. I'm sorry. Real quick, the other thing about our Express Life portfolio, when you're talking about simplified issue, there is no physical, right? There's no blood draw. There's no urinalysis. We don't have to go chasing around attending physician statements. There's none of that. Again, we're relying on the application as well as the data that we're pulling in to make a decision with that. That streamlines everything for your clients because look, your clients are busy, right? Your clients are extremely busy. So are you. You know that. If they can get the insurance that they need, excuse me, and avoid having to go through a lengthy physical, great, good for them. Makes everything smoother and cleaner. So we'll talk about the first one, and I love this one because this is a, to me, it's a very basic form of insurance that's important to many families, right? Living Promise. That's our final expense whole life product, right? Typically, the way you market and talk about this is surrounded around the planning or end of life planning, right? Do you have this taken care of? And I'll give you an example because my father-in-law passed away a few weeks ago. He had something similar to this. It was a different Mutual of Omaha product, oddly enough, but he had something like that. So it's, again, a way to eliminate a burden on the family when that comes. Now, to be honest, I hadn't gone through that in quite some time. So I really, even though I'm in the industry and I know what the costs are, until you sit down in a funeral home and you start itemizing all the things that are involved, you really don't get the costs of what a final expense or a funeral costs, right? You have all kinds of stuff, whether they're being embalmed or cremated and the type of casket or the type of urn. And then guess what? If you're going to the cemetery, you get to pay and rent all the vehicles that go there. And then you get to pay the chase cars and you get to pay just for having the services there. So there's a number of things that are involved. Average funeral expense is somewhere around $11,000 and up, right? The cost for my father-in-law was about $14,000. So the whole life or the Living Promise final expense is a really good one to bring up to your clients in terms of their planning. The way a final expense or a Living Promise works, okay, as you fill out the application, depending on the health of your client, and it's real easy, it's a pretty simple application, right? If they are relatively healthy, and they don't have a lot of issues or maladies, then when you do the application, we're going to probably issue them a level plan. Issue ages for that are 45 to 85, face amounts are 2,000 up to 50. The ratings are standard tobacco and non-tobacco, okay? If during the application process, and it literally will tell you section 1, section 2, if they answer this, they most likely will be offered level. If they answer this, it will most likely be offered graded. Graded means that, okay, there's a couple medical issues that we're not super comfortable with, right? So we'll issue it at a graded. The graded plan is available for ages 45 to 80, face amounts of 2,000 to 20,000, and it's just a standard rating. The main difference that I want you guys to be aware of between the two is that the level benefit plan, when they're approved, they're eligible for the full death benefit face amount from day one. On the graded plan, because they have some medical issues that we're not entirely comfortable with, but we want to issue them a policy, the benefit in the first 2 years, the death benefit, will equal the amount of premiums paid plus 10% if they pass away in the first 2 years. After year 2, it will go to the whatever face amount that we issued for them, right? So again, the difference between the two are the level plan. Yep, we're comfortable with their health. We're going to issue it, and they'll be given their death benefit fully at day 1. The graded, there's a couple things maybe we're not comfortable with. So there's I don't want to say pause, but there's a 2-year span there where if they pass away within the first 2 years, they'll be issued their premiums plus 10% on top of that. That's what makes things very competitive, because we are able to offer these 2 different plans under the final expense. Again, as you're going through the application, they're either going to be offered the level, they're going to be offered the benefit, or they're going to be declined. If you just read the application, it literally tells you if they answer yes to any question in part 1, they will be declined and they are not eligible. If they answer yes to anything in part 2, most likely they'll be offered graded. All right, that's the way that works. And again, we're always going to do our due diligence with this, but again, this is a simplified issue product, so there are no physicals. We're going to do an MIB, pharmacy check. We may do a phone interview. If we have something that's goofy that we don't quite understand between maybe the application and the information that we're pulling, that's a phone call. That's a quick and easy phone call to find out some additional information. That happens as needed. Again, maybe 15, 17% of the time. But again, it's another one of these things that we do to help you get policies issued. Children's whole life. So let's think about this for a minute. If we're talking to people that should be looking at the final expense, right? That market, they probably have children, they probably have grandchildren. If you are talking to people at final expense, you better ask them about their family. Hey, do you have any kids? Hey, do you have any grandkids? It's an important conversation because it helps you uncover the need, because maybe nobody's had a conversation with them about their children. It's a chance for you to educate them on different things you can do. For me, our living promise, again, which is our final expense, should be tied together with children's whole life every time when you can. Obviously, if they don't have kids, it doesn't apply. But as a grandparent, you can do children's whole life on a grandchild without the parent's authorization. I'll get into a little bit more details about that. But again, to me, final expense and those, and then bringing up children's whole life, they go hand in hand. Children's whole life is a whole life policy. Here's why. Look at those cool looking kids, right? If you're in front of me, I'm 56 years old, and you ask me about kids and grandkids, let me talk about them, right? Let me chat about my family a little bit, show a little bit of interest, care who these people are. What you're seeing there is my grandson, Caden, my daughter, Taylor, her husband, Jordan, who's okay. But at the end of the day, I love these guys. And if you ask me about them and you let me talk to you about my kids a little bit, it puts me in a positive frame of mind, and I'm going to be receptive to what you're going to bring up. Okay, by the way, I had my other grandchild, my second one, in the end of January. So again, another reason for you to bring up and have the discussion of, do you have kids? Do you have grandkids if you're having the final expense chat? Here's what it looks like for children's whole life. Issue ages, 14 days to 17 years. Literally 2 weeks old out to 17 years. There's a whole lot you can do with this. Something else I do want to add, that if you're asking me about kids and grandkids and let me talk about them, I'll probably introduce you to them. What a way to get some great referrals, right? My daughter and her husband do pretty well for themselves, so it might not be a bad idea for you to chat with me about it. But again, back to children's whole life, 14 days to 17 years, face amounts from 5,000 to 50,000. There's no medical exam. Again, simplified issue. There's no medical. There's only 2 health questions on the application. Only 2. They're easy. Grandparents can sign the application without the parent's signature. This is not meant for the grandparents to get around the parents. It's meant because of that we understand that the family dynamic in America is that parents and grandparents and kids live all over the place, right? And it can be a logistical nightmare. So why not make it easy, right? If the grandparents want to pass something on to their grandkids, great. Here's a great way to do it. It does build some cash value. Coverage is guaranteed out to the age of 100. It has a guaranteed insurability rider as well as a waiver of premium, which I'm going to talk about here in a second. Here's the important thing with children's whole life. Yes, it does help cover costs associated with the unexpected loss. Yes, there's some cash value that goes along with the child, but the primary reason for this is to provide protection for a child's insurability. When I'm talking to a client, and I've done this before, I don't talk to them about a death benefit for their child or grandchild. If you were nice enough during our discovery meeting and you talk to me about final expenses and then you ask me about my family and you bring up children's whole life, if you talk to me about the death benefit, in my head, I feel like you're killing off my kids and grandkids. Don't do that. That's not the picture I want you to paint. What you want to paint is, hey, what if you could leave your kids or your grandkids a legacy where they could have not only coverage now, but in the future without ever having to go or undergo underwriting? What would you think about doing that? That's the way you position this. Yes, it does have a death benefit, and I'm not trying to hide that. But what I'm saying is when you're having this conversation, the real purpose of this is to protect for the child's future insurability. There's an example for you. 2-week-old can be approved for 50 grand of coverage for 19 bucks a month. Silly cheap. Silly cheap. Now, going back to the providing protection for a child's future insurability, here's what this looks like. They can up the policy 5 different times in their lifetime, up to and equal to the amount of the original death benefit. We have 7 different times that they can pick 5 of them to increase their coverage. They can increase their coverage when they get married, purchase of a home, birth or adoption of a child, the policy anniversary on the 25th, 30th, 35th, and 40th birthday, right? So literally there's 7 options right there. They can choose 5 of them. Let's do a little bit of math. If they originally bought a policy and they got a policy for $50,000 worth of death benefit, and they executed an equal amount 5 more times, what's the total of the death benefit or the policy worth now? The answer to that is $300,000. And they did it because they bought that original policy, they executed the guaranteed insurability rider, they picked 5 different times and they upped it $50,000 each time. They turned a $50,000 policy into a $300,000 policy. That's special, and that's a heck of a legacy for you to leave your kids and grandkids. So again, anytime you bring up living promise and final expenses, you need to bring up children's whole life if it applies. Term Life Express, guys, we have some of the best term products out there. For Mutual of Omaha's appetite, and when I talk about that, every carrier has their appetite, what they're good at. We are a mutual company, so we're probably, I don't want to say picky, but we're a little bit more conservative in what we write. We want your preferred risks. Now, that doesn't mean we won't write people who have some issues and maladies. We write them all day. But at the end of the day, for what we want, our term products, I would stack up against anybody. So Term Life Express, what does it look like, right? We use a couple different face amount bands with this, and you'll see those over to the left-hand side there. Issue ages between 18 and 75. We have 10-year, 15-year, 20-year, and 30-year guarantees. So 10-year, 15, 20, 30-year terms, and face amounts from 25,000 up to 300,000. Now, again, look over to the left-hand side. You'll see that there's some difference in the age bands, right? Ages 18 to 50 go up to 300, 51 to 60 go up to 250, 61 to 75, the highest death benefit you're going to get is 150. Now, we do have built-in riders with our Term Life Express, all right? They're called our living benefits. These are great, and it's really a great way for you to position the value of our term product, right? What I mean by living benefits is that your clients have the potential to utilize a significant portion of their death benefit for terminal, chronic, and critical illness, all right? There's very few carriers that offer all three of those on an express product. Very few. That's a really good positioning statement that you can, when they're comparing term policies, and you can say, well, hey, you know what? I have something from Mutual of Omaha. Not only does it have a death benefit, but it's got a built-in no-cost rider that allows for these things. Again, waiver of premium for unemployment rider, residential damage waiver, common carrier. These are all nice things, but the important one is the living benefits, terminal, chronic, and critical illness. Well, here's what it looks like, right? And I just ran this one, and this was for a 33-year-old, $250,000 monthly premium for a 30-year, $69.87, right? So 33-year-old, it's guaranteed for 30 years. That'll take them out to age 63. Conversion options up until the end of the term. Common carrier death benefit provision, like we talked about. Tax-free death benefit. Obviously, when somebody passes away, death benefits are non-taxable. Conversion options till the end of the period. Residential damage, 6-month waiver of premium. If they have damage to their house of over $25,000, we will waive premiums for 6 months. Living benefits, again, we talked about this, right? Terminal illness, chronic illness, critical illness. I'd encourage you to go to our website, mutualofomaha.com/simple, and you can really dig in to the details of those. But again, keep in mind, living benefits are extremely powerful. Terminal illness, chronic illness, critical illness, and that's exactly how I position it with the clients. 6-month waiver of premium if they become unemployed. Here's the cool thing with the Term Life Express. You have the ability to convert this. This is the power of Mutual of Omaha Term Life Express. You have the ability to convert a simplified issue product to a conversion only whole life policy, or wait for a second, you can convert your Term Life Express to an IUL Express. I haven't seen any, and I don't know if there's any more in the industry, at least I haven't seen it in years, at any other company that offers the ability to convert a simplified issue express product to an IUL. I'm almost certain we're the only one. But at the end of the day, that is a benefit that you can bring up to your client, that, hey, we have options with this term. Matter of fact, we have a lot of options with this term. That's why I'm recommending it to you, or that's why I'm showing it to you. 2 risk classes, non-tobacco and tobacco, 18 to 75 non-tobacco. It should be 18 to 75 for tobacco as well. Face amounts, same bands, right? And we talked about those, 25 to 300 at the 18 to 50. And I'm going over this again because I apologize. I got this slide in the wrong place. This is the IUL Express, so that's my fault. We'll go on to this. Let me back up here. When I'm talking about the Term Life Express, going back to the death benefits and the terminal illness rider, these are all important things that you can bring up to your client. And again, we'll talk about the conversion options. When we're talking about conversion options, and I already let it out of the hat a little bit, the IUL Express, right? As far as I know, we're still the only simplified issue IUL on the market. And here's what that looks like. This is the slide I meant to go to now. Here's the IUL Express, right? 18 to 75 non-tobacco and 18 to 70 tobacco. Age and face amounts, same exact bands as you have in the Term Life Express, right? 25 to 300, ages 18 to 50. 25 to 250, ages 51 to 60. 25 to 150, ages 61 and over. standard non-tobacco, standard tobacco classes. There are, and you can utilize the different indexing strategies. 100% participation rate, there's a higher participation rate, a lower one, and a Bank of America agility index, right? So again, within an Express products, you have a lot of options. Something interesting is that there's a number of carriers out there that have what they call an accelerated IUL, which means there's maybe not as much underwriting as a fully underwritten IUL, but you're limited into what you can choose. You literally get one participation strategy, one risk class, and they make the decision for you. With us, you have the same options in terms of indexing that you do with the fully underwritten. So you can literally tweak an IUL Express in a number of different ways to help your client into what they're trying to achieve. The other cool thing is, and if you're not familiar with IULs, hopefully you guys know this, with IULs, you are required to submit an illustration. We have something called Easy Solve. Easy Solve, as you're filling out the application, creates a very balanced policy, and it also automatically creates an illustration for you, so you don't have to use WinFlex if you choose Easy Solve, and you can just utilize that. So you'll never have to monkey around with the WinFlex. But if you want to overfund it, if you want to do different things, you can utilize WinFlex and create your own illustrations for the IUL Express. Like I said, this is a game changer for those who have gotten into it. Nowhere else can you have a decision on an IUL literally the minute you hit submit. All right, that's something critical, and I think you guys will enjoy it. And down the road, we'll get into each of these products very specifically and a lot more in depth. Again, today is just a broad overview of Mutual of Omaha's simplified issue, but I did want to put it in here about the IUL Express. I have, and you guys do a really good job. You actually sell quite a bit of this for me. But for those of you that don't let IUL scare you. There's a lot of misinformation in the market, and there's a lot of misunderstanding even with the producers and agents out there about what an IUL is, and they think it's super complex. Those of you that don't sell it, I would almost bet that 9 times out of 10 is because you think it's too complicated. It's not. Your client pays a premium. Part of that money goes to the death benefit. The other portion goes to an accumulation bucket, which allows them options at some point should they choose to, meaning they can take out tax advantage money, they can take out a loan against it, essentially tax-free, or at some point, if they say, you know what, I don't want to make any more payments on that, call up Mutual of Omaha, say, hey, you know what, I'd like to have a paid up policy. What would that look like? And is that something I can do? Depending on how long they've had it in force and depending on the performance of the accumulation, yeah, in many cases they can. And it's a great option for the clients, but that's the easiest way to explain it, right? IULs, and this goes with any IUL. You pay a premium. A portion of it goes toward the death benefit. The other portion goes to the accumulation bucket. Well, what's that? Well, it allows you to do these different things. That's all you have to do when you explain it to a client. Don't overcomplicate this because it's not that complicated. People like to make it seem complex, and it's not. So let's talk about this a little bit more. IUL Express, for this instance, 33-year-old, I did a death benefit of $250,000, monthly premium, $122.29, right? That's a very reasonable thing. Easy solve, don't have to do an illustration. I let it go to the default and it automatically will choose. The default is the 1 year 100% participation rate. And we'll get into the indexing strategies and stuff like that. But quite honestly, I use the default of the 1 year 100% participation almost all the time. It has the same type of riders for the living benefits that your term product does. Again, they can accelerate a significant portion of their death benefit for the chronic, terminal, and critical illness. All right, they have the ability, and it allows to utilize some of the money to keep this policy from lapsing. It's what's called a lapse guard. So there's a number of different things, and there's also a waiver of surrender charges for partial withdrawals. Okay, those riders are all built in, cost nothing. They're inclusive to what we do. Here's what I did. And something and when we're talking about the indexing strategy and things like this, something to keep in mind is the money that is in the accumulation bucket, it's based on the performance of the S&P 500. It is not invested in the stock market. It is not directly invested in the stock market. We use that as a benchmark for how we credit these things. So as you're looking at up there on the upper right-hand side where it says tax-free death benefit, out to age 59, guaranteed. Okay, what does that mean? That means if this is never credited and the S&P doesn't perform at all, this insurance will last him out to age 59. Remember, the person I designed this on is the age 33, right? So that's 26 years of coverage guaranteed at a minimum. If it performs mediocre at a 2.75 crediting rate, it'll last to age 82. And if it performs at a okay rate of 5.8, this will last him out to the age of 100. Just to let you know, the average crediting rate, and even when you back test it with Mutual of Omaha, when you look at the 40 years of history of the S&P 500 performance, the average crediting is somewhere between 7 and 7.5%. So quite realistically, this policy lasts until the age of 120, right? But again, we'll get into the crediting strategies and how those look and how they work. What I would caution you against, and I've seen it before, what I would call teaser rates with different IUL illustrations. If you see any IUL out there that is illustrating double-digit returns, and again, my personal opinion, I wouldn't believe that. And typically, that's being done to hide fees. And if you want to, you can go to mutualofomaha.com and /simple, and literally we have disclosed all our crediting since we had IULs. All you have to do is go to that website, hit products, go to our IULs and look at the view rates, and it'll tell you what we've credited over the history of the IUL product since we've had it. So be wary of that. And what I would say, we'll get into it when I do a deeper dive into the IUL Express, understand what a realistic illustrated rate is, right? Because the worst thing you can do is have an illustrated rate that's unattainable, and then guess what? A couple years down the road, you get to explain to your client why it's not working and why they're not accumulating anything because they're being charged ridiculous fees. We don't have that. And that's why we use a reserved illustrated rate. Like I said, the illustrated rate that we're going to show is 5.8. Does it typically perform higher than that? Yeah, it does. Living benefit protection, we talked about that, right? Access to death benefit, terminal illness, chronic illness, critical illness. Tax deferred accumulation. Again, you can take loans and withdrawals from your policy tax advantage, meaning typically tax free. I say typically because maybe there's some goofy regulation that comes out in the future or something else that I don't know about where something like that would be taxed. But as of right now, there are no tax consequences to taking out a tax loan as long as or a loan against your policy, as long as it is not a modified endowment. This is cool for all of our Express products, right? This is a text signature enhancement that we have. You can literally do everything from your phone, right? As you're filling out the application, you choose the text thing. Your client can log in with their phone. They can see the application. They can sign the application. It has the delivery requirements, all that stuff on it. So this is something, and if you can, use your phone, hit the QR code. Or again, you can go to our website, mutualofomaha.com/simple, and in the products area there, it'll show you the e-signature enhancements. I have a lot of agents that use this because let's face it, the younger folks, that I'm kind of dating myself. I'm 56, so I'm an old dude, but the younger folks look at this and they love being able, it's a convenience thing, right? Everybody walks around with the mobile computer in their hand. It's called their phone, right? So why not make it easy for your client? I'd encourage you guys to look into this. This is something extremely powerful. Again, when we're talking about our portfolio, right? And this is as simple as it gets. IUL Express, Term Life Express, Living Promise, both level and graded, Children's Whole Life, right? Those things are extremely easy to use. They're very valuable products. They're as solid as they come. And again, think about it. You don't have any blood draws. Your client has no blood draws. They have no physical. They have no urinalysis. It's literally reliant on data and the application that we receive. Now, how can we do this? Well, we have different grading mechanisms to the data that we get. We're comfortable in the data that we get. So it's important to know that when we are looking at a client, yeah, we know the information. Now, what I will say is this, and this is something important for the agents out there. Sometimes the Medical Information Bureau and Telescript, whoever, maybe they got wrong information. Maybe the doctor was filling out whatever insurance and reporting form, and you guys have all seen doctors' handwriting there. It's horrible. So maybe the transcriptionist got the codes wrong. All right. Maybe it was reported to the agencies wrong. Okay, that happens. If you happen to go through the process and you get a client who's declined, you're going to get an email, and so is your client. They're going to get a letter that says, hey, you were declined because of this, this, and this. If they are very adamant that the information we got is wrong, great. We'll have the contact information there on these notices that they can go to the whatever reporting company and correct it. That's a value add for you to know that, right? That, hey, just because, and I want some of you to think about this, because I've run across this a number of times when I do these different presentations with agents and producers. And you guys, I think, do probably a better job at field underwriting than most. I mean, you're really good at it. Everything that I've seen kind of shows me that you really know how to drill into that. And what I mean by that is doing a little bit better research than just height and weight. You dig into their health a little bit more. That shows some value, but it also shows that you know where to go when you come across clients that have some certain maladies, right? But again, if there are issues, you need to find out about them, and then you can help your clients. Now, what I would say is this. I don't think our clients lie to us. I don't believe it. Some of you may disagree with me, but I don't think our clients outright lie to us. I think they may be sometimes guilty of omission, right? This doesn't matter. This was so long ago, it doesn't matter. This is not a big deal. This is not anything the company's going to care about or whatever. I truly believe it. I don't think there'd be malicious. So what I would say is, when you're talking to your clients, say, hey, you know what? Even if you don't think it matters, I need to know everything about your health history and dig into it. If they, ask them about their prescriptions. Okay, if they tell you what they're on, automatically, when were you first, or when was that first prescribed, and what was it for? You've got to go down that road with them. It does a couple of things. It shows your value to them, that you want to understand them better. But the other thing it does is that it also gives you a realistic expectation of what product can I take these clients to. If they have a whole lot of issues, go back to that express risk assessment at mutualofomaha.com, or you get a hold of myself or Cindy and we'll chat with you about it. You go, okay, wait a minute, let's unravel this. Here's some additional questions that you probably want to ask your client before you submit it, because I don't ever like agents to go through the process and then they get declined for something simple that they just missed, right? So those kind of things are important. Again, keep that in mind. Talk to your clients more about their health. You'll have a better understanding of what they would work for simplified issue. No labs, no parameds, quick issue. Again, no attending physician statements. There's my information. There's Cindy's information. If you guys need anything, if anything comes up, if you've got additional questions, again, you have our sales support staff. Feel free to reach out to Cindy or myself on anything. Again, you have an insanely talented group at Western Marketing in terms of your sales directors and your other sales managers there. But again, don't be one of these guys, and I came from this, whereas don't call a carrier, don't bother the carrier. Baloney, you call me. You call me, you call Cindy, you can get a hold of those if you need some help with something. That kind of stuff's important, and I want to be able to support your business. Now, real quick, because I wanted to make sure that I left some time for questions if we had them. But when we're talking about simplified issue, understand that on the applications, you need to read the questions to your client exactly as they're written. Don't try to interpret them. Don't start to utilize your own language. Just read in the questions. Hey, I need a yes or no answer for this. And then just go down the road with them. If for whatever reason you have a client that doesn't qualify for simplified issue or they get declined, that's not the end of the story. Maybe they need to go the fully underwritten route. Okay, simplified issue means, does your client qualify for the simplified issue products? Yes or no. If they don't, then maybe it's time to look at the fully underwritten ones. Don't be afraid of fully underwritten products. They're not intrusive. They're not that bad. There's just a little bit more to them, but that's the place that gives you the opportunity to make a case for your client to the carrier. And I don't know if you guys realize this or not, but every time you sell any policy, you are making 3 sales. You're making one to the client, that's the obvious one. You're making one to yourself, is this the right thing I should be doing? And then the third one is to the carrier. Hey carrier, this is why you should want to insure this person. So in the simplified issue, it's literally the application questions and the data that we're going to get. Fully underwritten means that there's a little bit broader chance at us looking at additional information. So again, the difference between the two. But again, guys, I appreciate your time today. If you have any questions, throw them in the chat or whatever. Or again, if you have specific cases that you want to talk about, feel free to get a hold of Cindy and myself.
All right, thanks, Kurt, and thanks, Cindy. Wow, a lot of information and not a lot of time, but folks, don't worry. We will work with Mutual to do future follow-ups to get even more in depth on products. Before we get into questions, now's the time to type those. We've already got a few good, thoughtful questions that have been asked, and we're going to answer. Just want to, drive home something. So when you're looking for the whole package, name recognition, product, service, financial stability, that whole package of carrier suite to offer, especially on a simplified issue basis, but really everything that Mutual of Omaha does, they do fantastic. We do a ton of business with Kurt and Cindy. We do a lot of business on the Medicare side with their partners over there. So I mean this sincerely. You couldn't find a better company to work with than Mutual of Omaha, hence why we're highlighting them today. So we've had a lot of people on. We have a few questions right now, Kurt. First of all, the first question was about how does this product compare with the Gerber Life product, the children's insurance constantly advertised in mailers. So can you talk to anything and about how you feel your children's whole life compares to that Gerber product?
Sure. Look, Gerber Life's been around forever, man. I mean, I hate to use the word ancient, but that's been around forever. But it's a good look. Gerber's a good company. It's a good product, no doubt about it. I think where we went on that is exactly kind of like what I mentioned when you tie together Living Promise, which is our final expense, with children's whole life and the convertibility features that we have. What I would say is that typically with many of the, and again, there's a number of different variations on the Gerber one. So if you want to talk about a specific one, get a hold of me and we can. But the way that you can add additional benefits, again, 5 different times. I've seen ones where it's a handful of times, or it does again have an option for you, or the cash value. In this instance, we have both, right? So when you come up against that, it's always a good idea to find out what version of that or variation of that you're running up against, and then we can kind of dig into it and talk about the best way to position yourself around it. But typically, if you bring up the fact Mutual of Omaha, and oh, by the way, this is what this product does, it not only provides an opportunity to increase the face amounts 5 times over the years, and you can start it off at 50,000 and grow up from there. So there's a couple of different advantages to it. But to speak more specifically about a particular Gerber one, I need to know what I'm looking at. But we can compete with that without a doubt.
Awesome, thank you. The second one was about how often can you change the participation percentages?
Yearly. So when you're looking at, and that's a really good question, because we have multiple participation percentages, typically on the policy anniversary, and hopefully you're doing this, right? Hopefully you're meeting yearly with your client, making sure that policy is doing exactly what they wanted to do. It's performing the right way, and then you can adapt and make changes or uncover new additional needs. Because look, things change over time. But yeah, you can do that yearly. Here's the other cool thing that you can do. You don't have to pick one. You can blend rates. What I mean by that is you can pick all four of them, put 25% of your accumulation in all four indices, right? Again, keep in mind, it's not credited in the stock market, it's benchmarked against it. So there's advantages to doing that, but typically for myself, and if you back test these, leave out the Bank of America one, not because it's bad, but because it's only been around for a little bit less than a year. But if you back test the other ones, they all end up over time performing fairly similarly, all in about that 7% range. But that's a good question. Yeah, and it's always advantageous for you to look at that and go, you know what, maybe we need to change this. But keeping in mind the purpose of an IUL is not for quick short-term gains. You need to make sure your clients understand that they need to be in it for the long haul with this. But good question. I like that one.
Okay. And it looks like the last question we have is just about the oldest age for the TLE, the Term Life Express. Does it go to 75 or what's the max age on that?
I'm sorry, which one?
Term Life Express?
Oh, max age is 75.
Okay. All right. Perfect. Well, folks, it looks like we are done and have answered all your questions. Kurt, Cindy, thank you so much, not only for being on for the last about hour, but also for your friendship and partnership. You guys have been amazing. I bug Kurt and Cindy probably more than they like, and they're always responsive. So I can attest to the service that they provide. So thank you for that. Thank you to all of you who have attended the webinar and sat on with us for about the last hour. It's not lost on us, again, that you aren't out doing appointments, putting food on your table. One last quick thing, even though Kurt and Cindy have their contact information, we like you to call us. We want to build and grow relationships with you as agents with Western Marketing. So feel free to call us first. We could probably save you a little time in almost every case and get your questions answered. So if you would call 1-800-852-7152, just ask for your marketer or a life marketer. We'd be happy to help you out. Other than that, thank you again, everybody, and make it a great day. Take care.
Thank you.